price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button or leave me a follow on Twitch. I do this every single day, or every Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time. So I am going to start off with our favorite cryptocurrency, and that is Bitcoin. So we're taking a look at Bitcoin. We're here on the 8-hour chart. As the price candles develop more and more, I like to go into higher and higher time frames to look for confluence on any bullish or bearish ideas. So we have enough price information that has occurred thus far that I feel okay interpreting the 8-hour chart. We'll quickly take a look at the RSI. No divergence or anything on the RSI. We're just tentatively hoping that this, we're looking for this area right here at the bottom of the range to hold as support. So basically this kind of range right here, we want to make sure that we hold this as support. There's not much to report on Bitcoin. We are seeing higher highs, we're seeing higher lows, and the overall structure is very good. So let's just move on to the next coin, and that is Ethereum. So Ethereum, let's go to the spot chart. Same sort of story. I have this line right here, which is the previous all-time high for Ethereum on the Binance chart. And very similar structure. You know, we had this buyer's climax. We came down to our automatic reaction range down here, and we're just looking for this area to tentatively hold as support. Everything looks fine. You know, we're making higher highs, we're making higher lows. There's still quite a bit of bearishness inside of the space. A lot of people are thinking that, you know, they're just, you know, a lot of people just aren't used to these drawbacks. These 20, 30, 40% drawbacks, they're very common inside of crypto. And we need to understand that this is a very volatile asset class. It is an emerging asset class. And it is what it is. That's just the nature of the beast sometimes. So, you know, yeah. A lot of people are talking about Cardano now. So Cardano, everybody is starting to ponder the possibility as to whether Cardano may actually have a chance to dethrone the king of all cryptos, or sorry, the king of the altcoin cryptos, Ethereum, given that it is promised to be launched smart contracts. So we can go ahead and take a look at Cardano, ADA USD. And it's been performing very well. We're kind of in this ascending channel here. If we throw on the RSI, we do see a little bit of a bearish divergence occurring on the US dollar pair. So be on the lookout for that. You know, there could potentially be people selling into strength here. The relative strength in the asset is declining, especially on the highs here. So be aware of that. You know, if we break structure inside of this range, we could have a temporary slowdown in the growth of this asset. We could come down to possibly levels. Let's see, where is our last major support? Somewhere maybe around this area right here where our last support / resistance flip occurred. So be on the lookout for that. We could, you know, start to form a range where we develop a bit of a reaccumulation after decline. You know, giving the asset time to cool off, giving the opportunity to accumulate shares and distribute, get the sellers out of the way, you know. That's often what occurs in distribution. A lot of people get scared at that word distribution, thinking that, you know, distribution means downside. All distribution means is a combination of taking profits and you know, the transfer of ownerships of shares. The shares of the asset are being distributed amongst players, amongst market participants. When we're in a bull market, these often show up in the form of a longer reaccumulation. You get these distributional events early on in the reaccumulation, and then from that point on, you know, the sellers are shaken out of the position. The new holders take a long position on that asset. We hold ownership in strong hands, and we get the opportunity to appreciate in value. So just because there is some distributional characteristics to an asset, it does not necessarily mean that it is a conclusion of the uptrend and that we are going to reverse from that level. Another chart that I want to just make you aware of is the Cardano Ethereum pair. So because of the notion that Cardano is, poised to kill Ethereum, quote unquote, you can actually measure the performance against both of those assets using this pairing. So right now it's very clear that Cardano is outperforming Ethereum. It has broken out of this range-bound condition here, and it is beginning to outperform what's going on with Cardano. So, short term, we're definitely in an uptrend. We're in a strong trading environment for Cardano. So the trend is your friend until it ends. Look for a possibility of a retest of this area. There may be some people who are holding their Ethereum bags wondering what the possibilities are of trading that asset, and if they do see a test of this level and a turnaround to the upside, you may get some of those long-term Ethereum holders potentially hedging their bets and adding to a Cardano position. So, these alternative currency pairs, you need a lot of flexibility with them. There are not a lot of people looking at the Cardano Ethereum pair, but if you want to measure an asset in like, hey, should I have held this or should I have held that, then these are the types of things that you want to take a look at. So what do I think about Doge is a question that I'm getting in the chat. It's kind of a loaded question. I think that Doge has interesting social aspects to it, in the sense that what is money? What is a currency? What is money? When you boil it down to its pure essence, money is a medium of exchange that two parties are willing to accept. There is no Doge team. There's no fundamental framework or roadmap on the development of Doge. Doge is a joke. It was invented as a joke. It was meant to be ironic. And, its only real use case is the fact that it is a medium of exchange on a peer-to-peer trust network that we all know and love as blockchain. So there are arguments to be made on both sides. Do I invest in Doge? No. Do I think that Doge is an investment? No. I think that Doge is quite an interesting anomaly. And its existence is funny. But wouldn't that be ironic? Wouldn't that be the ultimate layer of irony if the world just settles on using Doge as a currency? That's one of the characteristics that I find so fascinating about blockchain technology, is it's a decentralized peer-to-peer community network. Whatever the most community participants are willing to exchange with, that's a money. It goes back to, is it a money or is it not? It's going to take me personally a long time to kind of start looking at Doge as something that I would be wanting to trade. But it exists. People make money on it. People have made a lot of money on it. As far as, the utility or the fundamentals on it, I don't like it. So we're just going to leave it at that. Let me just try and get my webcam back up here. Still nothing? Oh, that was attached to my music too. Come on, give me signal. Give me signal. Give me a signal. Just give me 1 second here, guys. Let me try and get this going here. Pardonnez-moi. I like to keep the dead air on these types of things as low as possible. I do like to be an entertainment factor for you guys. But, well, there's the webcam. There we go. Perfect. Awesome. We got a face. We got a face. We got a talking head. Beautiful. All right. So we got another question here by I am Sauls. What do you use to track all of your trades? Well, I like, as far as performance and stuff like that, I do a lot of trading on Binance. Binance kind of keeps track of a lot of the P&L as long as on in terms of the futures and stuff like that. But other than that, listen, I don't trade a lot. I talk about a lot of different assets, and I post many profitable trading setups, but I hold 5 coins usually. I hold 5 positions, and I hold them long. I hold them for long-term swings. So, I'm not worried about a portfolio tracker because I'm more of a macro swing type trader. I get in on the momentum of the cycle, and I try to just capitalize the most on the longer term swings. I'm not a day trader. I've tried day trading. I think that if you want to be a day trader, it's a pretty cool skill to have. But the temptation to keep positions open inside of cryptocurrency is you need a lot of discipline to be a day trader in this space. What's nice about stock markets is they close. So a lot of day traders close their positions when they're trading stocks at the end of the day. So, there's a constant influx of new liquidity. You have a lot more opportunities in the short term in being a stock trader than you do being a cryptocurrency trader. The volatility is just crazy with crypto. So for that reason, I try to eliminate a lot of the potential downside with the volatility. Yeah, I've pretty much transitioned mostly to spot positions, and a lot of times they're not even on the exchange. I'm quite involved with a lot of DeFi plays now, and the DeFi plays, there's no P&L count on these DeFi wallets or anything. I'm using my MetaMask, and I'm coming in and out of trades, and basically I'm just waiting till I'm at the point where it's obvious that I'm in a profit. So I'm not looking at the P&L every day, and I actually think that it's a better play to not be focused so much on the P&L. Yeah, just but there are apps out there. Blockfolio, I think Blockfolio, is it Blockfolio? Yeah, Blockfolio is one that you can use. There are some other apps as well that can help you track the performance of your portfolio, but I just have it spread out all over the place, and DeFi has kind of made keeping track a little bit more difficult. Blue in his tank top is a major mood. Yes, you gotta like the tank with my little palm tree there too. Got this one in Costa Rica. I'm in a mood. All right, so a couple more assets that I want to talk about today. I want to talk about our 2 major governance tokens as far as decentralized exchange. I want to talk about Uniswap, and I want to talk about SushiSwap. So we'll go ahead and take a look at Sushi first. And the reason I want to take a look at Sushi is because one of the private members in my Discord reached out to me, actually had a little bit of a mix-up with sending coins somewhere. I guess this individual had a bunch of Sushi tokens that he was trying to send to a wallet, and I think he got the network mixed up. I'm not exactly sure what the entire story is, but long story short, he accidentally didn't have access to his Sushi for 2 months, and he's up 500% as a result of that mistake. So congratulations, you know who you are. And then, he reached out and told me the situation, and then we started to talk about, where I think Sushi is. Now, again, we're seeing a lot of these assets slow down in momentum a little bit. There is a little bit of a bearish divergence on Sushi. You can see on the RSI, we're having a decrease in the relative strength as the asset is starting to creep up to the upside. So there is a little bit of a bearish divergence there. Also, just the volatility inside of this range, we keep trying to break out of the range and get a failure. Breakout, fail, breakout, fail, breakout, fail, breakout, fail. So it's showing that it's really hard to commit to the upside. So if you are in Sushi and you're in it for the long haul, and you're willing to put up with a lot of the short-term volatility, then do so. But there's nothing wrong with shaving a little bit of profit off of this asset. I think, we could be up here for a little bit longer, but definitely if we start to break down inside of the range, you're going to want to consider maybe an exit somewhere there if we start to break structure of the macro accumulation or the macro potential distribution. The one good thing that I'm seeing here is just an overall consolidation of the volume. The volume's looking really good. We're not having institutional involvement in this asset. There's no institutional selling. So I think it's just, a shaky market with shaky retail investors. So for that reason, it's actually kind of bullish because the retail investors, as easy as it is to shake them out, it's just as easy to bring them back in. It happens all the time. You may even be one of those where you just sell and then the thing keeps going up and then you FOMO back in. It's very common inside of the retail space. So realize that, the structure that we're seeing short term doesn't look great, but it doesn't necessarily mean that it's going to yield some serious downside results. So let's take a look at Uni. And Uni is actually an interesting comparative. I started on Sushi on purpose because what we're kind of seeing back here was more or less what we were seeing in Uni, that kind of bearish divergence in the RSI, that slow grind to the upside, and then we had that failure, we had that sign of weakness, and then we accumulated short term and really took off. So we could actually see a similar thing play out inside of Sushi. Sushi was released after Uni, so they could be on the same sort of adoption trajectory, and they just maybe in different places. So you could expect this large pump inside of Uni. All right, so we're going to go ahead and take a look at Chainlink as well, because this one's kind of an interesting story right now. I've started to focus a little bit more on the Bitcoin comparatives with a lot of these assets because there's a ton of liquidity locked up in Bitcoin. 62% of the dollars in this space, they exist inside of the Bitcoin network. There is a ton of ability to move your favorite altcoin if one Bitcoin whale decides, yeah, I'm going to take a trade on the Bitcoin pair. So because of the amount of liquidity that is available in the Bitcoin network, we don't want to discount the Bitcoin pair because these OG crypto whales, these Bitcoin whales, they are not looking at the US dollar pair. The only US dollar pair that they are looking at is the Bitcoin USD. Anything else in regards to the altcoin space, it is that altcoin compared to Bitcoin because they need to be sure that they're not just getting into a trade for no reason. They need to be sure that whatever they're doing is going to outperform what they're seeing on their Bitcoin gains. And the only way that they do that is by using the Bitcoin pair. A lot of them don't care about the US dollar anymore, other than the fact that as the US dollar comparative increases, you get more and more users into the network. So we can quickly take a look at Link on the US dollar pair, and then we will go and take a look at it on the Bitcoin pair. So we have this kind of reaccumulation after decline occurring inside of Link. There's this wide range where this upper end of the range has a lot of space inside of it. So often when that happens, what that means is there's lower trading range. So you can even say that this is the automatic rally right here on a lower end range. So we can bring this all the way down to this seller's climax. So to kind of break it down here, you kind of have a mini distribution right here. You come down to a climactic action, seller's climax. You can see the volume. There's a climactic action on the volume, and then the volume kind of tapers right off for a while. So that's good. Low volume and the price begins to climb. That's showing an ease of movement. And then we're kind of range bound. We get above the area of the automatic rally. We can break out of that on a sign of strength. We get a successful test, and then we start to move out, and we're actually in a very strong environment on the US dollar pair. So what gives? Where's the follow through? Why is it taking so long for us to get these pretty large moves that a lot of us have seen inside of Chainlink in the past? It seems as though all the signals are there, the structure is intact, it looks bullish, we're getting all the bullish signs, but the follow through just isn't there. That got me wondering, well, why would that be? And I think it has to do with the Bitcoin pair. So if we take a look at Link BTC, you know, again, going back to the theory of the whales, the large Bitcoin whales, when Link really took off, like when Link went hyper parabolic, this may have been driven by an altcoin season where the whales participated. We'll often see altcoin seasons where there are many market participants, but there's a big difference. We get these kind of monthly or quarterly altcoin cycles where you have a lot of altcoins, you know, doing very well, and they're catching up to or sometimes exceeding the performance of Bitcoin. But then it seems like every year, once a year, you get a really big altcoin cycle. So what gives? What's going on there? It could be that on the US dollar pair, a lot of the altcoin cycles are simply altcoins transitioning from their undervalued price. You know, Bitcoin takes a move up, the liquidity trickles down, and the altcoins catch up to Bitcoin. But every so often you get these large cycles, you get these big cycles inside the altcoin space, and I feel that that is kind of driven by the money that is in the Bitcoin space. So when the Bitcoin whales are ready to play, that's when you get the really big moves. So when we're looking at the Bitcoin setup, we don't have a setup here. You know, the whales aren't interested. You know, the Link Marines, they can shill the coin, they can get new users, you can get a lot of retail people buying, but you know, these people are buying thousands of dollars of coins. You know, the whales hold thousands of Bitcoin. You know, if a whale decides, you know what, I'm going to take a trade, I'm going to put 100 BTC on Link, and I'm going to try and double my BTC so I get 200 BTC. Like, this is what they're dealing with. These are the numbers that we're talking about here. To them, it's nothing. To us, that would be like the biggest thing in the world. But, you know, to these Bitcoin whales, they have thousands and thousands of Bitcoin. And they'll throw 100 Bitcoin into something just blasé and casual. And then you get the crazy pumps. The crazy pumps gets the retail. Everybody ditches that coin and they go into this coin. And then the whale makes his money and then the whale leaves, as you can see by this steep decline. So right now we're range bound. We are range bound inside of Link. So until we can really start to get out of this range bound environment and start to tick up, you're not going to get the whale participation. Now, does that mean that Link can't go up? No. I mean, retail can pump prices. It's just not as easy. It's not as easy for Link to be able to do that, especially when the market share for retail investors is spread across a market of 6,000 plus coins. You know, why Link? Why should I choose Link? Why shouldn't I choose Band? Why should I do this? Why shouldn't I do that? You know, we're retail. You know, it's small money. It's small potatoes. The real gains come when a Bitcoin whale plays with this asset. And it is play. It is whale play. They don't care about Link. They just care about getting more Bitcoin out of Link. So when they see a nice setup on the Bitcoin pair, they'll take it and they're going to exit very quickly, as you can see by this drawback. This drawback is steep, very, very steep. This is profit taking into Bitcoin. And now we're range bound. So keep an eye on both pairs. I think that there's validity, especially right now, given where we are in the bull market. I think that there's a lot of validity in what's going on with paying attention to these alternative currency pairs. And it can really be the difference between taking a bullish position on the US dollar pair and taking a bullish position, or say taking a bullish setup that's on the US dollar pair, and then taking one that has a bullish position on both. So if you have an asset that is bullish, in a bullish position on both pairs, I think you're going to see a consistent gain inside of that asset. You're going to have more market participants getting ready to take a position in that asset. If it's just USD, Bitcoin whales aren't going to play. There are institutions, you know, there's still big players who are looking at US dollar setups, don't get me wrong, but 62% of all the dollars in this ecosystem are in one coin, so don't forget that. All right, so we can open it up to the chat now. We can take a look at some of the community requests. Drop it in the chat. What do you guys want to see? Let's see what we can see over here. I got a couple weird ones. What's hot on the watch list right now? Yield app, Cover protocol. Cover actually isn't a bad one. Let's take a look at Cover. Theta, sure. Theta, Cody, H bar. Okay, cool. Hey, regarding the Bitcoin and USD setups, I think Reef is on that notion right now. Yeah, I agree. I think Reef is, you know what, let's look at Reef. I have a small position in Reef. I kind of wasn't as liquid as I wanted to be on Reef. You know, Reef is, I don't know, man. Like, why does everybody like Reef? It hasn't really pumped. Like, its price action is pretty blasé. It's really not anything spectacular, but so many people talk about Reef. I don't understand why so many people talk about Reef when it's not doing what other assets are doing. Anyways, I agree with your sentiment. I think that we're seeing these, you know, we have higher highs and we have higher lows on this asset on US dollars, and we have higher highs and higher lows on the Bitcoin pair. So it's not melting your face off with any crazy moves, but it's appreciating in value over time. And its appreciation is keeping up to, if not outperforming, that of Bitcoin. So if you're in Reef, I think you're in a good position. Yeah, that's pretty much it. It's taking its time, but I think that it will eventually start to get a lot of retailers FOMOing in, because these are the moves that kind of, you know, catch people by surprise. We can even draw a range on this one at the previous buyer's climax. Let's see what we got. Yeah, so we're below the range right now. Yeah, I just want to see what happens. I just want to see what happens with this one. It's just quietly appreciating in value. Quietly appreciating in value. So we'll just take a look at that. Yeah, block fully. Okay, yeah. People are answering my questions. Perfect. Yeah, let's take a look at Theta. Theta's pumped quite a bit, so that'll be a good one to compare on Bitcoin as well. So let's take a look at Theta. And if you're new to this concept of you know, the Bitcoin pair, really take the time to try and understand it. Theta is looking really good. You know, we're leaving a reaccumulation. Are you in a position to take a trade right now? No. So if you're in it, I think you're in a good place. There's no reason. We're not seeing anything to tell you to take profits right now. It's going to keep appreciating in value based off of the structure on USD. Yeah, this is a good play. If you're in this, good. It's not a time to enter though. There's just not enough information to tell you where support is. If we do manage to pull back a little bit, you are looking for an entry to get into an asset that's already appreciating in value. You can watch for it to come down here, find support, and turn around. But yeah, just try to get them in. Try to get a position in stuff that's accumulating. Don't get it in markup, because you don't know when the markup's going to end, and you don't know how far the drawback's going to be after markup is complete. Okay, Cody or H bar? Sure, let's take a look at Cody. Cody. Oh, actually, I was going to do Theta on the Bitcoin pair, and I'm going to do that. Theta BTC. Yeah, so much cleaner setup on BTC with Theta. Let's see here. Let me zoom into the daily. Yeah, so this is the kind of stuff that you're going to get that follow through on, is when you have a setup that is consistent with other currencies. You know, it's a similar sort of story on the US dollar pair. The US dollar pair is a little bit further along. Now, we could actually come down for a test here. And this can take a few different forms when you're looking at this pair. Coming down for a test here, that could be Bitcoin dumping, or that can be Bitcoin pumping. It's just the comparative against Bitcoin. So realize that you know, a test on the Bitcoin pair doesn't necessarily mean that you're losing US dollar value, or it means that you're losing US dollar value very, very quickly. So you realize that. If you're new to this, you know, a good example of why you need to pay attention to this kind of stuff is the Ethereum Bitcoin chart. You know, if we look at the weekly on Ethereum BTC, basically where we are right now, we're in line with this kind of close of the seller's climax. So what that means is, if you had Bitcoin, if you had 50% Bitcoin and 50% Ethereum, back in September, on the 3rd of September 2018, you would have the exact same number today. Okay, so you could hold 100% Ethereum and you would have the exact same number today, and you could hold 100% BTC and you would have the exact same number today. Ethereum has not made a dime more than Bitcoin right now today since the original seller's climax of those two assets. So that's why this is kind of worth it to look at, because if your asset, if you're really bullish on a project but it's not outperforming BTC, don't buy it. Why would you buy it? It's not outperforming the safest quote unquote asset in the ecosystem. It's not outperforming the asset that pretty much moves this ecosystem. If Bitcoin's not performing well, the cryptocurrency market is not performing well. If Bitcoin is pumping, the cryptocurrency market is pumping. So this market ebbs and flows based on the moves of Bitcoin. So it's kind of disappointing, but it's nice to know that I held a lot of Bitcoin. I mostly DCA'd in Bitcoin, and I've just transitioned into Ethereum as far as my DCA and some of my diversification. And it's nice to know that I'm in the exact same place I would have if I had diversified many years ago. So take this into consideration, because it paints a very clear picture of what's the point. What's the point of diversification? Why hold this much Ethereum and that much Bitcoin if it's the same? When this asset starts to outperform Bitcoin, now it makes sense. Now you're really, getting those gains, those theoretical gains against Bitcoin. But as it stands today, right now, it's the exact same. Whether you held BTC or Ethereum, we are both in the exact same position in US dollars. Okay. Yeah, back to Cody. What time do I have? Oh, I got lots of time. Just an announcement, guys. I teach chart analysis. I teach cryptocurrency trading. I try to discourage you against day trading cryptocurrency. I focus more on the investment and building wealth over time aspect, leveraging technical analysis and fundamental analysis to truly help you level up your ability to spot value inside of an emerging asset class. And if that's the kind of stuff that interests you, then follow the link down below. Sign up for the VIP, my private island. We can get you on the path to really being able to make heads or tails as to this entire market. It's a very fast-paced market. It's easy to get emotional, and being an emotional trader inside of this ecosystem will yield you many, many losses. So it's good to have a home base of strategy and education where you can really build wealth, build wealth over time, change your life, not tomorrow, but the day after tomorrow, because that's really what it's about inside of this ecosystem. We're an emerging asset class. If you can understand the tech, if you can understand the fundamentals, if you can understand just how to do these transactions and participate with some smart contracts, not only are your investments growing, but your skills are growing. That's going to be a valuable skill one day that a lot of people don't really understand. So education is the name of the game. Join VIP down below. And if that's not your game, but you just like to get notified when I go live and want to hang out and chat and talk charts, then just join the free Discord down below. I got a free side and I got a pay side. All right, so that's the pitch. All right, so Cody on the dollar. We'll start out Cody on the dollar, and then we'll take a look at the Bitcoin pair. So Cody is melting faces today. Melting faces. So it's obviously going to be outperforming on the Bitcoin pair. Let's go ahead and take a look. If you got into Cody, congratulations. Good call. You were able to spot value in an emerging asset class. Very good. Yeah, let's go down to some smaller time frames, get a little bit of definition here. Let's go back over to the, it's trending, so we can go to the US dollar pair. Cody USD. Let's go to the 8 hour. Yeah, it's, okay. So basically what you are looking for is not an entry. You should have entered down here. Watch for these ranges to develop. And that's kind of easy for me to say, like coulda, shoulda, woulda, blah, blah, blah. But that's the way it works. Like, you have to identify accumulation ranges. When you're able to identify an accumulation range, that's when you can really level up your profits in this ecosystem, because we spent a lot of time oversold in Cody. We finally got, this was a long, drawn out reaccumulation after decline. And these are actually nice. These are beautiful, because the longer an asset accumulates, the more price appreciation it gets. And we've experienced a ton of price appreciation. Do not make the mistake of thinking that just because something is going up in value, that it must be worth me going in now. No, it's not. You know, this market ebbs and flows. People take profits out of this asset. There is a good percentage of traders in Cody that do not give a shit about Cody. Realize that. They don't care, okay? When the fun is over, they pull their funds. So what is the percentage? Is it 20% of the traders don't give a crap about Cody? Is it 30% of traders don't give a crap about Cody? Is it 80% of traders don't give a crap about Cody? Because that all contributes to the drawback. Don't take a position in Cody at these levels, okay? You could have had another short-term intraday trade down in this area back here, but you didn't take the intraday trade. Look for the trading range. Look for the trading range. If you can't get in on the trading range, you can't get in. End of story. You're going to get wrecked. You're going to lose your capital. Don't get wrecked. Don't lose your capital. It's getting distributional too. You know, it's getting a little inconsistent. We don't know how far this one's going to go. It might be concluding. I haven't done a point and figure count on this, and I never will do point and figure counts on these live streams. I can teach you how to determine price projections and price targets, but it makes for very, very boring streaming, because it's a lot of me sitting silently doing math equations. But getting those you know, skills are very, very valuable. Okay, IOTA pumped a lot today. IOTA has an incredible point and figure count, now that we're on the topic of point and figure. Point and figure, for those who don't know, it's one of the original styles of analysis. It was popularized, well, not popularized, it was utilized by Richard D. Wyckoff to get what he called accumulation counts. And these counts basically measure the volatility over time. So the longer an asset is in an accumulation, the higher the count. And you see how we have this really long accumulation range here? This is how it works. Guys, when you zoom out, you see it. When you can't unsee it once you see it, okay? Like, these range-bound conditions are where you need to buy. You don't buy these green candles. You just don't. You buy the range-bound condition. What's doing this right now? Reef. Reef is doing this right now. I probably should have a larger position in Reef, but I haven't gone into the fundamentals on it. So, you know, this is a beautiful accumulation. Huge, huge result. This is the cause. This is the effect. It's one of the three laws of Wyckoff, cause and effect. There's supply and demand, cause and effect, and effort versus result. Since the breakout, you're up 200% in IOTA. We don't know where it's going to stop. We don't know if it stops there and heads back down. That's not the point. I think the point and figure counts on this one were quite spicy, and I'm not going to disclose those numbers just because there's no guarantee, and I got to be responsible with what I say on a live stream here. I don't want to say a number and then have people say, "Oh, it's going to this number. I'm totally buying right now," because that's not what you want to do. Okay, not crypto, but Tesla is on sale. Tesla is not for the faint of heart. Tesla is not for the average trader. You got to be really careful with Tesla. You know, Tesla's been fucking pumping for years now. Like, it's got to stop at some point, but it's trending really, really well. And it's very popular on stock trading apps. So, you know, who knows when that's going to stop. It could very well keep going. I'm not going to talk about Tesla on here just because it's a crypto channel. A lot of people don't care. Not that it's not valuable. Hit me up in the Discord. You know, at me in the Discord and we'll talk Tesla. I don't mind talking stocks. One day the stocks will be on the blockchain. I don't mind talking about stocks. But a lot of people do. Yeah, let's take a look at Polkadot. Polkadot is I really like Polkadot, actually. I think that Polkadot's in a nice place because it's a beautiful governance token, and it hasn't been like performing extraordinarily well when compared to some of these other governance tokens and some of these, like, it's offering a lot of products. It has a DEX, it has an NFT market, it's got this, it's got that. It has a lot to offer, and it just hasn't, it just hasn't shown the performance of some of these other Ethereum-based assets. So, you know, if this is our accumulation, which is kind of a weird one, but anyways, this was our previous buyer's climax back here. We met resistance, we broke resistance, we're coming down for a test. So what are we on Bitcoin? We want about 6,000 Satoshis. If you can see DOT at 6,000 Satoshis, I think that would be a really good buy. I mean, it's not even that far away from it now. I like DOT. I've been looking to take a long position in DOT, and I think that time is coming. I think I'm going to get an opportunity pretty quick here. If we get one more little shakeout, I'll probably buy DOT. Yeah, it's a good project. I'll buy some spot DOT. I think this is nice. Let me look at the US dollar pair, just for comparative sake. PNF targets hit for DOT. The PNF count will give you a target, but oftentimes cryptos blow right past it. So then what's the point of the PNF target? It's to get you into a trade during accumulation and then structure your trading plan around how you're going to exit that position. A good example, like, okay, you said the PNF target was hit for DOT. Perfect. So let's go ahead and we'll just do a mock trading plan for what you would have done if you were accumulating. So let's say the PNF target was here. And when that PNF target is hit, let's say I'm going to sell 25% at the PNF target, okay? And then I'm going to go to a lower level. I'm going to go to a psychological level of $25, okay? This is just a very rudimentary way to kind of plan, but you know, sell half the position when we reach that psychological level just shy of $25, and then sell 25% of the position at the PNF target. So basically, by the time the PNF has been hit, I am choosing to leave a quarter of the position as a hold, as a long-term hold. So I inject capital into the trade, I take profits along the way, and I leave a position for the long term. That's a fantastic way to use these PNF targets. So basically, you know, if you were actually down here in the accumulation range for it, let's see what you would have gotten on the backup here. You know, you would have sold half of your position at 200%. So, you know, you sold half of your position at 200%. Basically, you're pulling you're pulling your initial investment out. So you pulled your total investment out and you have your initial still remaining in the trade. And then up here, you're at 400%. You've basically just tripled your initial investment capital, your trading capital, and you're leaving your initial investment in the trade. Now, this is a very bullish setup, and I'm not sure that I would have structured a trade this aggressively. But if I found a point and figure count that I was confident in, and I was confident in the market and the cycles of the market, then I may play something like that, you know, depending on the position size. But moral of the story is, you know, you made an investment down here, and you basically leave the position with the same investment you have down here, up here, and you get 3 times your initial investment back to go and invest in other projects. Having a strategy is so much more important than the technical analysis. A lot of people who come into this space who are new to crypto and new to technical analysis, they're like, oh, if I learn this and I learn this, I'll be able to tell the direction of an asset. And that's just not true. So if you're hearing it for the first time, technical analysis is not going to tell you what is going to happen. It allows you to strategize. It allows you to make plans. It allows you to take profits, and it allows you to enter positions. there's no guarantee. These are monkeys buying and selling bananas. There's no rhyme or reason to these candles. It's a way for us to measure strength. It's a way for us to see progress. It's a way for us to make comparative on our alpha. But honestly, guys, this is just people buying and selling stuff. There is no magic indicator. There is no crystal ball. There's nothing. The TA is a tool, and the tool is used to build your strategy. That's it. And the strategy is what I focus on in the group. You know, the TA is essential. You need to learn the TA. The TA is going to help you make entries. The TA is going to help you make exits. The TA is going to help you pick your take profit levels. But that's it. That's the limitations of TA. That's it. You know, the strategy comes from patience. The strategy comes from conviction. The strategy comes from thinking, planning, executing. That's what makes a good trader. So if nobody's told you that, there you go. Okay. What do you think about ETH chart? Same as BTC chart? Thanks. Yeah, Ethereum and BTC, they're pretty much at the same point. Basically, you know, they're in the same sort of point. So back to DOT, you know, we're potentially reaccumulating here. You know, we hit our PNF targets, so traders are taking profits. When people are taking profits, you can mistake some distribution, but we're in a bull market. I don't think the bull market's done, and I think that DOT has been underperforming when compared to some of its competitors. I think DOT's in a good spot, so we need to accumulate here. We're going to continue to accumulate and then probably take a move up. Huge liquidation. This is Kraken. Man, Kraken is illiquid. I don't know what's going on Kraken, but man, when the shit hits the fan on Kraken, look out, because man, the last dip, the last shakeout, Ethereum went to $700. $700 on Kraken. That's crazy. I gotta stop yelling into this mic. I gotta yell away. Anyways, yeah, been watching Adam. I like Adam. Hit me up in the Discord. We're going to start to wrap things up here. Guys, for those of you who are on the in VIP group, go ahead and prepare your questions, because every day after the Twitch stream, every Monday, Wednesday, and Friday at 1 p.m., we go ahead and do the virtual classroom and talk about your charts. So if you're new to VIP, I think I advertise it quite well, but just get ready to join the private classroom. We do it via Zoom. And that's the opportunity for you to be able to speak, ask questions, and talk about the charts that you're doing in peer review charts. Okay, please have a look at the monthly BTC USD chart. Higher volume in March 2020 and January 2021, while RSI, Stokes, and other momentum indicators are overextended for 4 months in a row. What if a 2013 dual top scenario plays out? However, the top is not 100K that everyone expects, but it's already at 58K plus, and we have entered a mini bear market. Your thoughts? You know, it's really hard to make those types of comparisons on, you know, these past performance type comparisons. I think that yeah, let's just go to the weekly. You want to look at the monthly? On the monthly? Sure, let's look at the monthly. Let's go to log. When you're looking at a lot of stuff, go to log. Logarithmic scale is better for the long-term stuff. So 2013, the double tops type scenario. Yeah, so we made a top and then we came back down and then went for that final push. It's possible. Anything is possible. What was the drawback in that? I don't know about a mini bear market per se, and I also don't expect us to have a 75% drawback. I really don't. The only reason I say that is because the trend is up and the trend is your friend until it ends. And just because we can make a comparison in the past doesn't mean that it's going to happen today. Again, you know, these market cycles, they rhyme. It doesn't necessarily mean that you're going to hit these targets. Let's look at the RSI. We're oversold. You know, we can be oversold for a long time. We can be overbought for a very long time. The last time we were overbought, it was for 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 months. 9 months overbought. 1, 2, 3, 4. So I don't know. We got 5 more months of oversold or overbought. Yeah. What else did you say about it? Stokes and other momentum indicators overextended. Yeah, these momentum indicators I more or less ignore. And the reason for that is they're just mathematical algorithms. Again, this goes back to the fact that people are just buying and selling this thing. You know, as the retail enters this market, do you think they're looking at the RSI? Do you think they know what a MACD is? They don't. They just buy it. You know, they hear the hype and they buy it. If you were around in 2017, you'll know that the sentiment right now compared to what it was back then is very, very different. I think a lot of people are still scared right now. I think, you know, those who are in the space, we have people that bought at 56, 58K and they're scared. They don't know what's going to happen. They think maybe the top is in. And you have a lot of these scary narratives beginning to play in the background. Everybody's sharing bad news. Everybody's sharing bad sentiment. And that is not the top of a bull market. The top of a bull market is nothing can fail. This will go on forever. This is the paradigm shift. We are going to go to the moon forever. That is the end of the bull market. If people are still scared, if retail is still scared, you're fine. Don't be scared when retail is scared, okay? Everything you do in this market needs to be counterintuitive. Me personally, can we take a little bit of a drawback? Yeah, but I'm really not worried. I mean, how long was that bear market? Honestly, like some people are so impatient to become a millionaire. It's ridiculous. Warren Buffett said it best. You know, Jeff Bezos asked Warren Buffett, hey, your investment strategy is so simple. Why doesn't everybody do it? And Warren Buffett said, well, nobody wants to get rich slow. 1, 2, 3, 4, 5. 5 months. 5 months is not a bear market. 5 months with a 75% retracement is unlikely at this point. Not impossible. Certainly not impossible. Just rather unlikely. We're making higher highs. We're making higher lows on the intraday. We're just not ready to be that bearish. You know, it's just, if you're scared, that's good. That means that we're not at the top yet. Okay. Digibyte. You are not on BTC. I am on BTC. This is Brave New Coin Liquid Index for Bitcoin. This is the longest history that we have on Bitcoin. You get one daily candle every day at the daily close. BLX. Get the BLX. Brave New Coin Liquid Index. Very good. Very good thing to be looking at. If you had a lot of Litecoin right now, what would you do with it? I am losing faith in its utility. Should I continue to hold and move to ETH or another coin? It's usually when you lose faith in something that it moves. Let's take a look at Litecoin. What do you believe the utility of Litecoin is? Because I can tell you what I believe the utility of Litecoin is. The utility of Litecoin is to service as a test net for Bitcoin. If you bought Litecoin because it's cheaper, that's a retail mistake. Bitcoin and Litecoin are fundamentally the same. The only advantage Litecoin has over Bitcoin is it is the test grounds. So I feel much less safe holding Litecoin than I do Bitcoin. Nobody messes with Bitcoin. Nobody is going to do any experimental things with Bitcoin. Nobody, okay? Litecoin, they're going to play. They're going to mess around. They're going to try different things. They're going to get Lightning Network working. They're going to try out the Taproot protocol. They're going to do a bunch of stuff. Faster transactions don't matter. The central banks are going to release their own digital currencies. You got to stop thinking about these things as currencies. They're not currencies. Bitcoin is a trust protocol. Blockchain is a trust protocol. And Bitcoin is the underlying security asset. So, you know, it's the reward for the miners. Their miners are upkeeping and decentralizing the server. And the whole notion of paying for your coffee with Bitcoin, probably not going to happen. Bitcoin is not a currency. It is not a currency. Litecoin is Bitcoin's testnet, in my opinion. That's the best utility for Litecoin. Bit of an ascending channel here. You know, we kind of We have a buyer's climax, automatic reaction. We came up, oversold. I think we just came a little too fast here, so we may need to consolidate a little bit longer inside of Litecoin before we get some larger moves. Let me get off the futures chart and go to spot, because Litecoin's an old coin, so we can get some old information on Litecoin. Let's see where the SR flips on this one. So we're looking to break. Okay, so we've got a nice SR flip right here that was confirmed. So we're kind of working out this area right here. We need to get a commitment above this level. So this is the level back here where we found initial resistance back in 2018. This was one of the bounce levels, and we're just working our way to the top. You know, it's lagging for sure. It's absolutely lagging when compared to Bitcoin. You would have been far better off holding Bitcoin. I don't even need to look at the pair. Yeah. Guys, when you're wanting to release your Bitcoin and put it in other assets, just look at this pair, okay? It's a downtrend. We're going downtrend. Until this pair becomes an uptrend, like, don't focus on the bullish setups, don't focus on the symmetrical triangles or the Wyckoff or any of that kind of stuff. Don't focus on that stuff. Just notice when the trend changes. When the trend changes, now you can say, okay, well, it looks like it's going to start outperforming Bitcoin. Litecoin is not outperforming Bitcoin. It's actually underperforming when compared to Bitcoin. Is it appreciating in US dollar value? Yes, but you would have been better off holding the larger, safer, higher market cap, higher dominance asset. You know, the one that you thought you couldn't make any money on. And I'm not trying to be a dick. I'm just trying to, you know, bring a point home. But this is very common. It's like, well, I can't afford Bitcoin. It costs too much. I'm not going to make any money. You know, this is telling you clear as day that Bitcoin would have made you more money than Litecoin. So take these charts into consideration. Bitcoin is the ecosystem. You know, don't discredit Bitcoin. You know, yeah, it costs a lot of money to buy one Bitcoin, but you don't have to buy a whole Bitcoin. And if you held Bitcoin instead of Litecoin, you would have made more money. So this fallacy that you can't make money on these expensive assets is just, it's clear as day. It's right here. It's not true. Okay. Yeah, faster transactions, sure, but honestly, it doesn't matter. Okay, I am not scared at all, but it's a game of probabilities, and it's always good to think of the other side of the equation and prepare for all scenarios. Money, after all, can be made regardless of the direction of the asset chooses. Thank you for your response and the time and effort you put into this. Much appreciated. You're welcome. Yeah, you know, it is a game of probabilities. We can perceive an edge through technical analysis, but we can't determine a direction, and that's the bottom line. We just can't. Money can be made. Money can be made and money can be lost. And for those who are new, it's far better to focus on the money that you can lose than the money that you can make. It's very common. You know, you start doing the math equations. It's like, well, if I buy Ripple at this price and I buy this many Ripple, and if Ripple makes it to $1, then I will be a millionaire. Like, that narrative is so toxic. It is so poison. It is so against what you need to do as an investor, what you need to do as a trader. The price is completely irrelevant. Don't focus on price. Price doesn't freaking matter. Stop buying cheap stuff because you want a lot of a coin. Just don't, okay? Yeah. Anyways, I'm pretty much going to leave it at that. That is all the time I have for today. If you enjoyed the content, please leave me a follow on Twitch, or don't forget to hit the subscribe button if you're watching the replay on YouTube. I want to thank you all for joining in on the stream today, and please trade safe. It's a jungle out there. Peace.